Hey, good afternoon, everybody. Welcome to the Daily Recap. Doing it in a little bit of a different fashion here. I'm Laz. I'll be narrating the broadcast. I don't think you're going to see me, but I wanted to take you through a little bit about what we saw today, and again, kind of follow up on what I talked about yesterday in the recap. We're going to start with the S&Ps, new highs in the S&Ps. Very methodical, interesting snapback here in price that I think caught a lot of people off guard, as typical with a lot of these moves. And what you're seeing, I think that's really the most interesting thing here is that, this market just seems like it has some sort of, predetermined destiny, if you will, as to where it wants to go. Obviously, I'm looking at just a snapshot of a segment of time. This goes back roughly through May. If I take it back even further, just to kind of paint a fuller picture of price, there's a couple different ways you can look at this chart. I'm actually going to flip to a weekly chart so we can get a sense of, going back almost, 2.5 years. And from this perspective, we still are very much, in this very, very tight, I know it's an interesting way to say it, but it's this rising channel pattern. And, the market's been sort of captive to this pattern. It's been, really the benchmark since the beginning of 2013, almost, let's call it almost 2 years at this point, of just, consistent higher highs, higher lows, higher highs, higher lows. And this is, again, still where we live. Where is this market heading? It's, anybody's guess. I think if we are respecting this pattern, or we have to give this pattern the respect it deserves. I think the market will probably peter out somewhere, possibly into this upper band of resistance. And again, I'll go back to the daily just to kind of zoom in. This is that same chart. That could be somewhere up in this SPY. I'm looking at the SPYs here. SPYs 201, 202, somewhere in this upper range. So it wouldn't surprise me if we saw, that kind of a move from here in the coming days. I'm not much in the business of making, big forecasts. I just don't think that that's ultimately what makes somebody good at trading. I use patterns and I talk about things like this just so I can help make structured decisions. It's not about, necessarily trying to say, oh, this is where the market's going, or this is the top, or this is the bottom. I just don't think that, like I said, that's worth anybody's time. But, we do have to respect the fact that, we may see, as we've seen, throughout the course of this pattern over the last, 2 years or what have you, we have to respect this upper boundary. So that's, something to point out here for some of the shorter term traders. Obviously, we are probably overbought, for whatever that means. I'm not a big overbought, oversold person, but we had new highs here. We'd like to see this area consolidate maybe for a couple of days before we get another leg higher. That would probably be healthy. That would give a chance for these shorter term moving averages to play a little catch up here to price. Obviously, it's when you have the support of the EMA directly under price, it tends to be a less risky trade than just buying up here and hoping that the market continues to rise. We've seen some of these moves in some stocks, and I'm not saying that the market is necessarily like any of these stocks, but LinkedIn is an example. LinkedIn, once it got going, it was just this slow bleed higher. And even now, there's still really not much of a pullback. You're getting this consolidation. And, yesterday, you can see how that, that 8 EMA was that catalyst for, a little bit of some of that support you saw, that 2-day, move off of that level. So, keep an eye on these, especially the 8 period EMA, which is this blue line. What happens to that, and maybe a couple of days of consolidation as this 8 period catches up to price, which is healthy and natural. So the market continues its bullish ways, and with it, what we want to see is what's really leading the charge, or what's acting in accordance with the market. And that's really kind of the head scratcher for me. And look, I didn't spend my, I didn't look at thousands of symbols today, but looking at some of the bigger cap names, obviously the one that jumps out is Apple. Apple obviously is sitting at new highs, and even though the market made new highs today, you still have a real healthy looking chart. Nice pullback today, inside day, sign of contraction. A few more days like that, let this 8-period EMA catch up to the price of the stock. You might see another, strong move to the upside there. So some good, healthy digestion of price in Apple. Some of the other names, and some of them I talked about yesterday, and again, some of these are more, momentum tech names. You're not really seeing it all across the board. Google, another, big cap tech name. While Google, like I said, can change at the drop of a dime, right now, certainly not making that push for new highs. New highs sit up here around 610. And we're just sort of languishing in and around this area. A few more days of sideways here, and you might see another pop higher. But Google's certainly not participating today as the market, made new highs. Facebook, again, I like this overall shape, but the stock certainly just acting a little on the more lethargic side relative to what the market's doing. Some other stocks that I talked about yesterday, Twitter. Again, I'm just kind of highlighting some of the bigger names. Twitter, obviously the huge gap up on earnings. Got that pullback. Again, notice the pullback, and it finds support right when the 8-period catches up here. So right now, Twitter's kind of stuck, and Twitter has the possibility to, like I said, you see these prices here. These are from off the charts. But, a break of this 45 half level, we could see buyers step back in, and we could see that, that next pop higher. But certainly as the market's, made its move into new highs over the last couple of days, Twitter's kind of stalling out here. Could be building a base. Not every stock is going to trade, perfectly correlated to what the market does. Individual stocks have their own personality and identity, and will do ultimately what they're going to do, separate of the market. Typically, when we talk about the market, we're always going to look at the banks. We'll look here at the XLF. And you can see XLF, definitely starting to work here with the market. Again, very similar looking type of structure in the XLF that we just, that I just showed you in the overall market. So you have this, this very, very, well-defined ascending channel pattern, and this could be making another push to that upper boundary. So we'll keep an eye on that. Some of the individual bank names that I tend to look at more frequently as for leadership, Goldman. Here's Goldman Sachs. Again, Goldman not really quite the leader that it once was. And yeah, this is a chart going back, from January 13. So here is basically February of 2013. It's been a lot of zig and a lot of zag for Goldman over the last, 18 months. So while the market's been in this, upward rising channel for that time period, you don't quite see that here. Could this big name get going? It sure could. But it's been a real difficult trade for many because of that consistent zig and zag. And every time it seems like it wants to break out, it tends to fail. And it's, it's got a lot of sharp turns without really making a whole lot of forward progress. Here's a weekly. Again, I like to look at the weeklies, and that'll show you that. This is, again, back to 2013, lots of back and forth, lots of big green up, big red down, big green up, big red down. This is what I call hard money. Now, could Goldman, start to resume and get out of this, this difficult, place that it's been in? Yeah, it certainly could. And it looks like it may, be sort of on the cusp of that. So we'll keep an eye on, some of the bigger banks and the names to come. Here's JP Morgan. Again, not really making much progress. I'm showing you weekly charts. I'll remove some of these lines. But, going back to, here's October, November, December of last year. Again, just not necessarily anything to write home about. Not a trend. You have a flat 8, a flat 21. So banks really don't have that, some of the bigger banks don't really have some of that inflow of money. Now, obviously, there's always diamonds in the rough. Morgan Stanley still looks like it's got some upside potential there. Morgan Stanley sort of, like teetering with, getting above that resistance zone around that, mid 33 level. So we'll keep an eye on some of these. But banks not necessarily, where there's good money flow. You really got to do your due diligence in this tape. Yesterday I talked. If you didn't watch yesterday's recap, take a few minutes and go back and watch. I highlighted, I tried to give a little more education than just talking about, what happened today. And we talked about time frame, alignment a little bit yesterday, and I showed stocks like LYB that these are weekly charts, just real steady railroad tracks between the 8 and the 21, and again this is a sign of good momentum, good strength. Expedia, another one that has a good looking chart, and again breaking out, good structure overall. And again, these are weeklies. These are the type of names that you need to be keying on right now. Some of the names you would think would be rocketing towards new highs. They've either stalled out or they're just not quite what they were. I think the most notable post earnings would be Amazon. Amazon had that big gap down and then kind of gapped up, and it's kind of not really making much headroom here one way or the other. And it's this is hard money. So if you find yourself trading some of these stocks and you're not really you're saying, well, the market's making new highs, I'm not making money. It's probably a function of your stock selection more than anything else. So take a look at some of the names you've been trading if you've been actively involved in this market, because I think that'll be a big telltale of whether or not you're putting yourself into really good situational type trades. BIDU, another one that I'm keeping an eye on. BIDU, again, like I said, huge move here. Pulling back, not really participating as this market, makes new highs, at least in the short term. This just could be, a stock that just needs more time to build a base because it's had such a large move. Here's the weekly of BIDU, and basically since May, you've had this huge move from basically 150 up here to whatever the highs were, 230. So a big move, and it could take some more time here to digest. Typically, when stocks go into these long basing patterns, it's because they've had large directional moves, and just like on the dailies, you need these moving averages to play a little catch up and start to ultimately be your launching pad or your trampoline for potential higher prices. CMG, another high flyer, again that's had a huge move. So some of these names that you would think would be making new highs that aren't making new highs, they're just these are just tired stocks that have had huge runs in price that ultimately need a rest. And so you're seeing a little bit of I think the key to making money now while the market's making new highs, it's not that it's lethargic, because I heard a little bit of chatter about this rally, nobody caring. It's just that stocks have gone a long way already, and a lot of them just need to build bases for the next weeks, months, whatever it may be. So you got to do your research and find the diamonds in the rough that are that are trending higher. You can't just go back to the same old if the same old isn't working the way it used to work. Traders that ultimately survive and thrive are the ones that are willing to change what it is they do when they have a reason to change. So that's my 2 cents here. It's been an interesting trade. It's especially everybody's going to say, well, it's the end of the summer, everybody's on vacation, nobody cares. We're making new highs on declining volume, all that kind of stuff. And while it all may be true in some regard, the reality of it is we make our money from the movement of price. So price is what we key on. And if the market's making new highs and there's opportunity, then there's opportunity whether or not everybody's on the beach or not. So try not to get caught up in the noise and the news and the nonsense. And again, dig in and ask yourself a couple basic questions. Are you trading stocks that have good structure and good alignment, or are you kind of focusing on things that aren't necessarily working and being stubborn? Those are really good points of reference, and if you can at least be honest with yourself and say, look, what I'm doing isn't working, in the event that is the case, then you're probably going to be more willing to shift and move into try to find some new opportunities out there, because they do exist, and there's actually tons of them. You just have to do your due diligence. As always, I'm Laz. I apologize for the lack of camera. It's probably for the better that you don't see me anyway. Have a great day, everybody, and I will talk to you later.